What's up, guys? Today, bringing on another amazing guest for you. We have the broker of record of Royal LePage Signature, Mr. Chris Slightham. As many of you know, Royal LePage Signature, one of the biggest Royal LePage brands out there, 1,500 agents. His entire family has been in real estate for decades. So the amount of value that Chris drops in this episode is just unmatched, especially with the current market we're experiencing, all of the data that he points to, and his take on where everything's headed. So I think you guys are really going to love this one. Enjoy the episode with Chris Slightham. What's up, everybody? Welcome back to the Price to Sell podcast. I'm your host, Matt Campoli. And you know, we already got another great one for you guys. But before I get into it, I want to just give you guys a huge shout out for always supporting. Please, leaving us the good reviews that you are, sharing with your friends that I hope you're doing. But if you have not subscribed yet, please do. Please leave us a review. All this helps support us, helps us keep this thing going. So big shout out to you guys. But today with me, we have another wonderful guest. We have the broker of record of one of the largest and most reputable, well-known brokerages in our province, I would say.
Thank you.
Royal LePage Signature.
I appreciate it.
We have Chris Slightham in the building with me. So thank you for coming.
Happy to be here.
Thank you for not sweating on the way in here.
Well, I'm on the edge. It's a little hot today. I'm not going to lie to you.
But yeah, I mean, we've had a number of signature agents. Like you guys have some of the best in the business under your umbrella. So I want to applaud you for that.
Thank you.
Right? We had Sam Hewitt on, Tom Story, David Sinelli, Saher, My Condo Source, Jazz and Simeon, and probably others I'm even forgetting right now. But a lot of the best in the industry, I would say, are with Signature. So you guys have done an amazing job breeding these agents.
I appreciate that, and we're very lucky.
Yeah.
We do have amazing people, and we're lucky to have such a great team. That's for sure.
Yeah, and good leadership, and here we have you.
Wow.
So, right. So let's. I've heard only but good things, but
Appreciate it.
let's get into a bit of your history and background.
Sure. Yeah. So we've been a family business for our father. My brother and I are partners now, but our dad started in 1965.
Wow.
So we've been around a couple of years. We've seen a few things,
Yeah,
a few market shifts, and a few learned a lot along the way. And then in 2001, we were an independent company up until 2001 when we affiliated with the Royal LePage brand, and grew quite a bit from there. So
what was the company called before?
Slightham Real Estate.
Oh,
It was
cool.
a family
Nice.
business. Started in Don Mills, which is where our grandfather was a builder back in the day. He actually built the model homes for the first homes in Don Mills.
Wow.
In the 50s, and so we evolved naturally into the brokerage side of the business, and so we still have our first office is still on the same location that it was now it's called the Shops at Don Mills, and it's a great location, and we love it.
And then being a good location, eh?
Yeah.
Now that it's Shops.
Yeah, it's
Crazy.
phenomenal.
Yeah.
Great place to go to work, I always say, and lots of restaurants, lots of great. It's just a great environment.
How many agents do you have right now?
Across all three locations, we have just over 1,500.
Huge.
As a total. Yeah.
And congrats on your Wellington office.
Thank you.
Been there.
Yeah.
Really nice.
Yeah. Thank you. Yeah. You joined us, I think, on one of our
Lives.
live signature lives. Yeah. That's right.
It was awesome. Good experience for me too. I appreciate you guys even inviting.
Oh no, for sure. You're welcome anytime.
Yeah. So yeah, let's. So you guys, you started. You had Slightham, and then you went into Royal LePage.
Yep.
And how was Signature born?
So when we were making the decision to affiliate with a national brand, we looked at the overall branding of the business and felt that, and this was a time, technology had well taken off by then, but the internet was still fairly. This is 2001 we did that, so it's still fairly early days. But we could sense that, we're going to have a broader reach, and so explaining the Slightham name works really well in Don Mills and did for decades. But as the evolution of the industry and the way business was being done changed, we felt we should probably retire that name and have something a little more generic. And we went back and forth on a bunch of names, and it was actually our mother that picked that name out. And she said, "What about Signature?" And we said, "Yeah, it sounds like a great idea." So it has the S in it, like our name, family name, and we thought it was appropriate for the business, and that's actually how it came to be.
That's amazing. And then this time, how many agents were you guys?
We were when we affiliated with Royal LePage, we were about 160 agents at that moment in time.
So you've 10x since.
Yes.
Huge.
Yeah.
And what do you think's been like a main reason for this exponential growth for you guys?
That's a great question. We really focus on service. Like, we have a real passion for true full service for our agents. And I think it's something that has served us well, supporting folks that really want to be professionals in the business. And so we really work hard at providing all the resources that you could need and not have to. You can find them elsewhere. If you're on your own and you want to hunt down a graphics designer and a videographer and management support and training and facilities, you can package it all up yourself. There's no doubt. We wanted to be somebody that would deliver that for you, so you can really focus on the development of your business, on your core revenue generation, which is working with clients and serving them really well, knowing that you don't have to worry about your support staff and all the bits and pieces that come along with it. And that's been our philosophy. Like, how can we make your life easier as a professional realtor? That's basically the way we go to work every day. And we spent a lot of time bringing a lot of resources to our team and continue to always look for new and stay ahead of where the market is going. And I think that's been really, beneficial, I think, for our team and helping us attract and retain great realtors.
Yep.
And we also build great facilities. And that's been something that from day one we've focused on. And so I think you can be proud to come to work in the facilities that we've created. You want to go there because they're well appointed. And I think you feel that when you're in the environment, you're going to get stuff done.
Yeah. Office culture is huge.
It is.
Yeah. And being in the office makes a huge difference. How was your shift during COVID, during the pandemic?
Great question. It was something we jumped on right away. So I believe the lockdown was March 17th, I think, originally, or closer to the 23rd, somewhere. I can't remember the two dates. Right away, what we did is we went to, and we coined it, I don't know how we came up with it, but it was kind of go on the fly. We created what we call Signature Live. And we jumped onto Zoom. First time that we'd ever used it was for our very first Signature Live event in March of 2020. And we knew that we didn't know how long we were going to be, obviously. They said, "What's a 2-week lockdown?" We said, well, or 3 or whatever it was at the time. We thought, well, we're all sitting at home, required to save lives and protect the healthcare system and protect people. And so we felt that there was going to be a lot of need for information. And we knew of the Zoom platform. We had contemplated using it for our office meetings in the past. And we just jumped right in. And we went to 3 days a week, right off the hop. We did a Zoom town hall style meeting effectively, Monday, Wednesday, and Friday for about, I guess, to the 1st of June, when if we can remember that far back, the first sort of, relaxing of the rules. And then on the 1st of June, we went to a 2-day-a-week program of Tuesdays and Thursdays, and we haven't stopped since.
Nice.
So we were able to bring information. We brought guys like Rich Robbins, Tom Ferry, Jared James, Mike Staver, agents from our organization, top agents, of what they were doing to stay connected to their clients at this unbelievable moment in our history. And we had tons of content. We obviously talked about what was going on in the marketplace often. So that's how we pivoted quickly.
Yeah.
And it worked, and still to this day works really, really well.
Yeah, and I feel like you guys are providing all the tools. Like, you're giving all these education.
Yeah.
Right? An incredible amount of education and value. All these tools for your agents. What is one thing that but there's that one piece of the business where obviously that agent has to go and do themselves.
Yeah.
Right?
Yeah.
So how are you helping your agents navigate, a current market like this? Like, you might know the numbers. I don't. I've heard some things, but obviously I've heard, for example, a number like 30% of agents, so 30% of the people that are agents currently came in during COVID,
Yes.
right? So everyone got their real estate license.
Yeah.
We're close to 100,000 in Ontario now.
Mm-hmm.
Is that number, are you monitoring those numbers? Or is that number significantly decreasing now? Because it's getting harder out there.
It's a great question. We are starting to see a decrease, but it's not significant
Okay.
yet.
Mm-hmm.
And I think we have to get through the balance of this year. The Toronto Real Estate Board, being the home board for the vast majority of agents in the province, that'll be a benchmark we'll all be watching, with the reset of dues in the 1st of January, the recent approval of the new healthcare platform, well-being platform that Waryah has introduced, is going to raise everybody's costs another $500 or $600 net.
And what does that cover quickly?
So it's a great question, and I don't have the exact,
Okay.
but it does cover some healthcare pieces. It does not cover dental.
Okay.
And it gives you some disability coverage and, God forbid, some life insurance as well.
Mm-hmm.
So I think that there's a cost, right? So that to me is a turning point for the industry to see at the end of this year who's going to stick it out, and that's it'll be interesting times.
What are the TREB numbers right now for realtors?
They're around 70,000.
70. Okay.
Yeah.
So obviously a good chunk of Ontario. I'd be curious to see. So what, like I hear a lot of the pain points. A lot of the agents come to me like new and not new.
Yeah.
But a lot of people are struggling for business right now because a lot of the food, which is inventory, is off the table.
Yeah.
Number of sales.
Yeah.
Off the table.
Yeah.
So how are you helping your agents, or what are some key pillars or tips that you're giving some of these agents to help?
This time last year, probably remember, Matt, the Bank of Canada raised interest rates 100 basis points in July. And that was a shocker to, I think, everybody.
Yeah.
We looked back they've been setting rates since 1935, and they have never moved at that, from a proportional standpoint, that much at once. So that was the moment in time where transaction volume dropped 50%. And when it went down, along with prices, that really was a game changer. So at that moment in time, we said to everybody, we've not been through a pandemic before, but we've been through markets that have adjusted because of financial, influences. And what we know from that is that if you are consistently engaged with people, even when you're not seeing the results in the sense of the deals, if you stay engaged and you're proactively out there in a market where there's no tailwind anymore driving it, it is what it is, you're going to survive. And that's the key, is getting to the other side. And now, so 12 months later, we've, through our Signature Live platform, through sharing ideas, through having top agents like yourself come on and talk about, really practical, effective strategies to drive business. We're here to talk about it. We've been through it before. It's interesting to note that the last 12 months has been the slowest transaction volume in 25 years, with the highest number of members of the Toronto Real Estate Board.
Yes.
So you can say factually that this is the most business competitive real estate market in the history of the Toronto Real Estate Board.
Wow. Yeah.
65,000 sales, normally running around 95,000. And then, as you remember, in 2021, there was 120,000. But on the average, we're missing about 60,000 ends in the last 12 months from a normal year. That's not immaterial.
Yeah, it's huge.
So, you really do have to focus on the core activities of staying connected to people. Doing what you do is making sure that you're visible, and being super proactive. Otherwise, you're going to struggle. And when the market does start to turn, because I'm very confident that the next 12 months of sales, starting July 1st over to June 30 next year, there'll be higher volume than there was in the previous 12 months.
Mm-hmm.
But if you haven't put yourself in position to participate in that, look out.
100%. I do agree. And that's why, like, my philosophy has been, we're just looking any sort of economical downturn for any business, those who are, even from an investing standpoint, the ones who are doubling down on those hard times, maybe you're buying more real estate, maybe you're doubling down on a stock, maybe you're doubling down on your business.
Yeah.
You're likely going to come out winning, right?
Absolutely.
So me, from just speaking for myself here, I've been personally throwing more money into my business, just trying to really put myself out there so that when things do start to come back to normal, I can hopefully take advantage of those extra ends that come out, right? So yeah, it's just an interesting time to navigate.
It is. And you make bold moves like you're doing, that's when you capture market share. It's tough to capture market share when it's like a freight train running down the tracks and everybody's, anybody can do a deal but now is the time. So it's brilliant that you're taking that strategy and investing and because it's tough, right? When transaction volume drops and you're, making investments with, again, not having the results immediately, that's a bold move, right? That's a bold move. And so when you're in that situation, those that choose that path, you're going to get payback in the next 6 to 12 months because of those investments you made.
Yes. And it's going to be delayed, but we got to wait.
It'll be delayed.
Yeah. So it's, it's very interesting times. I feel bad for the new agents out there who may not know the difference. Yeah. And they may put a lot of hard blame on themselves. Like, maybe I'm just not good at this. But it's just a really difficult time,
It is.
And speaking to like a consumer now, for someone looking to navigate this current market, whether it's a first timer or investor, because a lot of it's psychological.
It is.
Right? Yeah. The news doesn't help.
No.
Right? That's why I'm here trying to bring on guys like yourself or women who really understand what's actually going on inside versus a news article that says every condo Toronto owner is losing money. Yeah. So, what's your take on everything going on right now and just speaking to a consumer?
Yeah. Well, what we always say is patience is profitable. And so in a market like this, and I get it, it is stressful, right? Especially if you have not been an active investor or a homeowner for a very long time, you don't have the benefit of time to understand that things do come back. This is a temporary situation. So I would hate to see somebody make a permanent decision in a temporary situation where they, unload their property at a, lower value than it's going to be in the next 2, 3, 4 years. If you look back over the last 40 plus years, the Toronto real estate market, based on Toronto TREB stats, has grown at about 6.5% a year historically. And that's through highs and lows, if you even it all out. That's a really nice return compounded every year. So you really do have to have patience. And knowing that our country's strategy is to grow by upwards of 1 million people a year, we also know that we're not building enough housing. We just physically can't get it built to house that type of growth. Until that changes, regardless of really what's happening in the overall marketplace, the GTA is going to be busy. We're going to need more housing. There's going to be pressure on pricing. At the very least, with that kind of growth, there's going to be a floor on pricing. And we saw it last year. The big change in July dropped average sale price into about $1,090,000, I think, from an unhealthy and unsustainable level in February of 22. And it really just sat there. There were some little movements here and there along, between that moment in time and really February of this year. But it really leveled out. It wasn't a complete free fall and kept going and going and going. It reset to where it needed to be based on the new cost of money. And found its place.
Mm-hmm.
And then as soon as the Bank of Canada announced it was going to hold rates in January, then confidence returned, and
May was,
oof,
yeah.
right? I mean, that was a little shocking, really.
Yeah, it was.
right?
It was. Yeah.
I mean, we had a 15% price jump between
Yeah.
January and May.
Mm-hmm.
I mean, that's unhealthy,
Yeah.
right? So
Yeah. But that just speaks to the amount of buyers out there.
there's the
And
resilience,
That's literally it.
right? So if you can hunker down, I know a lot of people chose variable rates, unfortunately, when rates were low, and they're feeling the pinch. But I always say, please try and find a way to hang on.
Mm-hmm.
Costs start to stabilize. Your rates may come down, or maybe find a shorter term fixed rate for a while if that's going to be a little less than your variable, and have patience. It will pay off in the long run with the dynamic that's going on in our marketplace today.
Yeah. And what about these buyers who maybe haven't entered the market yet? So the first timers who are just really just like shot down in a hole right now because, like, you know, maybe their income isn't really increasing every single year, but the market's doing what it's doing. That's probably like based on just supply demand.
Yeah.
When things start to get more positive, it's going to continue to go up. So
That's
like,
right.
what's some advice you'd give to people in those situations?
It's tricky.
Yeah.
And housing costs in the GTA are high. Now, it's relative to the rest of the economy, the economic reality of the GTA, of incomes. If people couldn't afford to pay what they're paying, it wouldn't be at the levels that it's at.
Mm-hmm.
So the economic reality is these are where values are likely going to be. If you are in a position to make a buying decision, a lot of folks I've heard, or some folks anyway, I've heard say, oh, I'm going to wait till rates come down because I want my monthly payment lower. But as we just witnessed from January to May, they didn't drop rates. They just said, you know, we're going to hold rates. And prices went, they didn't even drop them yet.
Mm-hmm.
Prices went up 15%.
Mm-hmm.
So from observing that, I can't imagine what's going to happen when they finally have to start to reduce rates in the marketplace. So where are values going to go? So what I would suggest is this. If you can get in the market today with the budget that you have, you're paying your purchase price in today's dollars. Your mortgage rate is going to move around, right? Maybe you lock it in for a year or two or three, take a shorter ranged locked in rate if you're not comfortable with the variable. Now, or because now is really when you should be having a variable rate, not when they were ultra low, but that's a whole other session probably.
Mm-hmm.
Get in today with today's prices, because what you'll notice is when there's either an indication that we're stabilizing our rates or dropping our rates, the pricing pressure will begin.
Mm-hmm.
And if you're paying $200,000 less for a property today than maybe you would have had to pay in February of 2022, your interest rates, yes, are probably 2.5 times higher. But I promise you this, you'll save much more by getting in while costs of the unit or the property you're buying is $200,000. A lot of mortgage payments to catch up that $200,000 savings,
Mm-hmm.
right?
Yep.
And then make an adjustment when rates, if and when rates come down in the future, then adjust that, but you've locked in your cost.
Yeah. Yep. Lower land transfer tax too.
Lower land transfer,
Lower down
everything.
payment. Yeah. Yeah, it's a good perspective to own, because a lot of people will just get scared by and have this different mentality where it's like, I'm going to wait till rates come lower, because they're trying to really focus. They're rate heavy focused right now.
Because you mentioned the headlines, you know, at the
Mm-hmm.
start there, and that comment, and it's natural, right?
Mm-hmm.
You read the headlines, and it's all about rates right now. We've got another rate announcement coming up in 8 days from now.
Yep.
And let's see, that will be
July what?
12th.
12th. Okay. Yeah.
So that will be a moment that I'm watching for
Mm-hmm.
to see what the bank does. Is the bank going to raise rates again, as they've indicated they might be required to do?
Mm-hmm.
Or are they going to say, you know what, we're pleased with where we are. Again, we're going to go into a holding pattern. And I think that will be a real point in time where we're going to see a shift in behavior.
Yes.
Depending on what that rate announcement is.
What do you think?
Great. So let me get my crystal ball out. I wish I knew. What I believe is, I believe the bank's work is done.
Mm-hmm.
I don't believe they need to raise rates based on just the anecdotal evidence we have out there. However, I'm not a central banker. I don't know all the complexities.
Mm-hmm.
I also believe that they would err on the side of caution if they felt that inflation was still too present for them to stop their strategy.
Mm-hmm.
So I believe it's worked already. I believe that things are trending in the right direction. However, they may feel like they want to either add some room in there so that they're letting people know, hey, we're deadly serious about this, spending situation we're in. So watch yourself. But also it gives them an opportunity to have a little more room to reduce rates when that time comes.
Yeah.
And so there's a possibility there. I think it's probably 50-50 at this moment in time, but my gut says the work's done, but we'll see what they feel about it.
It will be interesting between that and whatever they do in July and September.
Yes.
Right? And is delayed, like for May as an example.
Mm-hmm.
They stopped holding in January.
Yeah.
Right? And then people kept seeing a hold, and then the buyer confidence, which is it's a huge amount out there. A little bit came forward. They were off the sidelines, and bang, 15%. Yeah. So it's I'm trying to tell people now, like, to get ahead of it, because it'll happen pretty quick once everything starts to get positive, and the headlines start to become positive, and because you have everybody just waiting to just jump back in eventually. So
well, you think about the growth we've had as a country in the last year.
Mm-hmm.
And you think about the reality that they had to reverse their quantitative, easing to quantitative tightening, their program, and it put the brakes on the market. It wasn't like the need for housing disappeared, but there were 30,000 fewer transactions from the average year in the last 12 months.
Mm-hmm.
But the need is growing. So, to your point, sitting on the sidelines is likely what folks are doing. So as soon as they make the adjustment of strategy to say either confirm that we are holding, we're done moving rates, the next direction is likely down for rates. So, I think we're going to find that folks are going to jump off the sidelines pretty quickly. Maybe buyers and sellers, because there could be some sellers that have been holding off.
Mm-hmm.
And we're going to have a pretty active market.
Yeah, definitely. Agreed. And one of my last questions would be your take on, especially since you yourself and your family has been in the industry for so long, and you've probably heard this millions of times, where people are like, oh my God, it's $300K, that's so much. Like, will it go up in price? And then it's $600K. Oh my God, it's $600,000.
Yeah.
Will this go up in price? So when it comes to pre-construction pricing, let's talk about Toronto condos, price per square foot, right? A lot of people are resistant to the current prices builders are launching at, right?
They are.
And they can't wrap their head around, like, are we going to see 16, 18, 2,000, right? So what's your take on the pre-construction game currently and where prices are headed?
That's a tough one. It really is. I think right now there is a fairly significant gap. It's one of the widest gaps between resale and pre-construction prices. Mm-hmm. So I respect that it's difficult to wrap your head around some of the existing pricing. That being said, it's tough to also see how the cost of that could come down over time. Construction costs, land transfer, levies, land costs. We're not making any more land. So long term, there really is only one way the price can go for these units. as long as you believe that immigration is going to stay at the pace that it's at. If you believe that's going to change, so you're going to have demand, really need for housing decline if they choose to change their immigration goals and targets, then, yeah, you might want to wait on that decision. But it's hard to see how we can produce units for any less than what they're being built today. We sit down with the biggest builders in the city. We have great business relationships with them. We sell a lot of new construction as a whole. This year, not as much because of the obvious challenge and costs. And everybody, they make all this money, these guys, they just keep raising the prices. Well, if you have to dig in and really appreciate what it actually costs, how long does it take to get from idea to move-in day? It's roughly 10 years. And so it's hard to imagine how they're going to do it for less.
Yeah.
So long term, I think you're okay. But I appreciate that at this moment, it feels difficult to pull the trigger on some of the core new product that's out there right now. So I respect that, but I really do, with the factors that we're dealing with in our marketplace, I think they're probably going to be just fine.
Yeah. Yeah, I can agree. And people don't really break down their costs
No.
to see how tight their margins are.
No. Look, you want to sell a cup of coffee, you go buy a cup of coffee, do you really stop and think about if the owner of the coffee shop is making a profit?
Yeah.
No, it seems like a fair number, right?
Yeah.
Same, I get it. It's human nature.
Yeah, yeah.
We're not wired to go, are you okay? You making enough
Yeah.
margin, right? Because these are big ticket items.
For sure.
And the cost of housing is expensive here. And, it's a real reality we've got to face. But at the end of the day, if you do take the time to study, as we do, really what it costs to put a project from idea to completion, including the appreciation of time and all the components that go into that, these developers, unless they can make a reasonable profit, then they're just not going to get built, which doesn't help our situation.
Yeah.
Is we need housing. So can you imagine now if these projects launch and they don't get purchased? Well, that's taking future inventory that's needed out of the market. So what kind of pressure was that going to put on supply and demand 3, 4, 5, 6, 7 years
Exactly.
from now? So there's a lot to kind of unpack there, but it's the GTA.
Yeah. Yeah.
Right.
Yeah. Exactly. And then we're at the end here, but
Yeah.
I'd love for you, again, someone who's as successful as you are with an outstanding brokerage and being in the business through your family for so long, any piece of advice maybe to give the realtor who's struggling out there during these times?
Well, it's the same advice my dad gave me when I started. You've got to talk to people every single day. If you're not proactively reaching out to new people every single day, proactively, you're going to find it challenging. The fundamentals of the business have not changed. The strategies have. Technology is unbelievable today. I mean, it's like they made social media for our industry. It's fantastic.
Yeah, for real.
It's a great tool.
Yeah.
But the fundamental has not changed. It's connecting with new people every single day. And look, I get it. It's easy to say. But if you can build that into your daily routine, whether it's 5 calls a day out to your database, or knocking on doors, or doing open houses every weekend, or using the power of social media to connect with your community, your database, you are going to be successful over time. But remember, when you're new in any industry, whether you're starting a retail store or a restaurant business or you're entering real estate, you're a startup. So again, patience is going to be required, but you will not be successful unless you're proactively connecting with people every single day.
Yep.
Full stop.
Love it. Cannot agree more.
All right.
Well, Chris, you've been awesome. Thank you so much.
My pleasure. Thanks for having me, man.
Yeah, of course. And if you want to leave some of your info where people can find you or the team.
Sure. Yeah, you can always find us at royallepagesignature.com. That's basically the easiest spot to get us.
Okay.
Reach out anytime.
Done. We'll post your links in our descriptions. But thank you so much. And to everyone out there, again, appreciate you guys always staying in tune, supporting. And please don't forget to like, subscribe, share. Hope you guys enjoyed this one. And we'll see you on the next one. Peace.